Every so often, the world receives a quiet reminder that the biggest economic earthquakes do not always begin in the places we expect. They don't always erupt in the trading floors of New York, or the central banks of Beijing, or the bullion vaults buried beneath London. No. Sometimes they begin in far quieter places. In a narrow jewelry shop in Jaipur, where a family chooses silver bangles for a wedding. In a solar factory in Gujarat, where engineers scramble to secure months of material before tariffs hit. In a small home in Mumbai, where a mother sets aside silver coins for Diwali, a tradition older than most modern currencies. And yet, these small decisions, multiplied across 1 billion lives, can shake the global financial system. Because today, the silver market, from Wall Street to Shanghai, from London vaults to COMEX warehouses, is being bent, stretched, and reshaped by a single force that almost no analyst predicted. A force so persistent that it shook the CME during a record-breaking price spike. So powerful that overseas premiums exploded within minutes when the futures market went dark. So overwhelming that even veteran miners now admit, physical is king. Yes, I'm talking about India. The country whose demand for silver has become so intense, so insatiable, that metal is literally being flown by plane across continents just to meet it. The country whose imports quadrupled in a single month. The country whose citizens keep buying even as silver hits all-time highs in rupee terms. The country whose appetite is draining London vaults, tightening supplies in New York, and rewriting global price discovery in real time. And what you're about to see is not a headline, not a viral story, not a speculative rumor. It is a structural shift, a fundamental rebalancing of global silver flows that may redefine the price of this metal for the next decade. Because when 1.4 billion people move in unison, the world does not have enough silver to keep up. So today, let me take you inside the story. How this happened, why it matters, and why even seasoned miners, economists, and global traders now say the same thing. Watch India. Everything depends on India. Hello there. I'm Professor Edmund Halberg. For more than 4 decades, I've been wandering through the worlds of history, economics, psychology, and technology, trying to understand why humanity keeps repeating the same grand mistakes while hoping for better outcomes. For most of recorded history, India has had a relationship with silver unlike any other nation on Earth. Not casual, not seasonal, but foundational, woven into weddings, festivals, savings, craftsmanship, inheritance, and identity. Long before Wall Street traded silver futures, long before London standardized good delivery bars, India was already the world's largest physical consumer of this metal, and not by a small margin, by a staggering one. According to the Silver Institute, India dominates 3 pillars of global physical demand: silver jewelry, crafted in tens of thousands of workshops across the country; silverware, a cultural heirloom passed across generations; retail silver bars, purchased by households as savings and security. In some years, as the Institute notes, 1/3 of all the retail silver bars sold worldwide ended up in Indian homes. Just imagine that. Every 3rd bar minted on Earth was bought in India. That alone would be enough to influence global markets. But then something remarkable happened. Something no traditional economic model fully accounted for. Around 2022, India entered a new economic chapter. A chapter defined by rapid GDP expansion, one of the world's fastest-growing major economies, a swelling middle class, millions moving into higher income brackets, a manufacturing boom, especially in solar panels, electronics, and EV components, and a generational shift in wealth, with young investors embracing metals but distrusting purely digital speculation. For the first time in modern history, India's old world and new world collided. On one side, the cultural, emotional, ceremonial attachment to silver, a tradition older than many modern nations. On the other side, industrial demand, vast, unrelenting, mathematically unstoppable, driven by solar technology, electronics, semiconductors, and the green energy transition. And these two forces did not cancel each other out. They combined. They amplified. They multiplied. Suddenly, India was no longer just the world's largest consumer of silver jewelry, or the world's largest buyer of silver bars, or a nation with deep cultural reverence for precious metals. India became something far more influential. A country where cultural demand plus industrial demand plus investment demand merged into a single, overwhelming economic force, a force capable of draining inventories in London, shifting price discovery away from financial markets, and reshaping global silver flows on a scale few analysts saw coming. And that is why, today, India doesn't just sit within the global silver market. India sits at the center of it. Now, let me show you the moment the global silver market realized something extraordinary was happening. In October of 2023, India imported about 15 million ounces of silver, a healthy number. A number consistent with tradition, festivals, and seasonal retail patterns. But, in October of 2024, the same country imported nearly 60 million ounces. Not 20% more, not 50% more, 4 times more. A surge so large that even seasoned analysts had to recheck the data. A spike so violent that it sent shockwaves from commodity desks in Singapore to bullion vaults in London to mining companies in Idaho. A 4 times jump in 1 year, in 1 single month. This was not normal. This was not seasonal. This was not cultural tradition alone. This was a warning flare, a signal that India's demand had broken out of its traditional patterns and was now moving with the scale and urgency of a rising industrial superpower. To understand why, we need to look at the 3 forces that collided at the exact same time, creating the perfect storm. 1. The festival engine, Diwali, plus the wedding season. Every year as Diwali approaches, Indian silver demand naturally rises. Gifts, jewelry, family investments, ceremonial purchases, these have been part of Indian life for centuries. But 2024 was different. Diwali arrived during a moment of rising incomes, booming consumer confidence, and soaring sentiment around precious metals. Millions of households, from Rajasthan to Tamil Nadu, rushed to secure silver before prices climbed even higher. The cultural engine was already running at full speed. And then came the shock. 2. Industrial buyers panicked and started stockpiling. This is where the story takes a dramatic turn. Across the world, geopolitical tensions were rising. The U.S. was considering critical mineral tariffs. China was tightening export rules. Solar and EV manufacturers feared bottlenecks, and India's industrial sector, especially solar panel producers, made a decision. Do not be caught short. Secure the metal now. Buy 6 to 9 months of silver in advance. This single behavior transformed the market. Instead of buying gradually through the year, companies front-loaded their entire future demand into a single quarter. For the global market, it was like a sudden vacuum, a powerful suction force pulling metal out of vaults in London, Zurich, Singapore, and Dubai, all funneling into India. 3. Inventories. Inside India collapsed. And then came the third blow. Wholesalers across India, already strained from months of strong demand, began reporting something alarming. We are running out of silver. Retail dealers ran low. Industrial suppliers ran low. Large distributors ran dangerously low. With Diwali approaching and factories depending on uninterrupted production, there was only one option left: import aggressively, import immediately, import at any price. This is why premiums inside India surged. This is why silver began flying by air, not ship. This is why the London inventory buffer was drained faster than analysts expected. The result: imports didn't rise, they erupted. When these three forces combined, cultural demand at full speed, industrial stockpiling, panic collapsing inventories within India, the outcome wasn't subtle. Imports didn't rise gently, they didn't trend upward in a neat economic curve. They exploded. Because when 1.4 billion people want silver and industrial buyers want certainty and wholesalers want to survive, the market behaves like it's been hit by a tidal wave. A tidal wave that the rest of the world, including London, COMEX, and global refiners, was not prepared for. And that single month, October 2024, became the turning point when the global silver market realized India isn't just participating in the silver market anymore. India is driving it. And this is where the story takes a turn no one expected. India's 4-times surge in silver imports wasn't just a statistical anomaly. It was the moment the global market snapped, the moment when London vaults tightened, COMEX inventories thinned, and even veteran traders whispered the same uneasy question. What happens if India keeps buying like this? Because remember, this was only the beginning. Industrial buyers had just started stockpiling. Festival demand was accelerating. Wholesalers were already warning of shortages, and deep beneath the surface, another force was gathering. Something far larger than jewelry traditions, far larger than festival buying, far larger than even industrial demand. A force that would push the global silver system to its limits and expose a weakness that has been quietly growing for years. In Part 2, we'll step into the heart of that crisis. We'll follow the metal as it leaves London by plane. Watch premiums explode across continents, and uncover why analysts believe the world may be heading toward a silver shortage unlike anything in modern history. If you thought India's 4-times surge was shocking, what you're about to see next changes the entire story. I'm Professor Edmund Halberg. Stay curious and prepare for Part 2.